Dangote Cement Plc, Sub-Sahara Africa's leading player in cement production, engaged the capital market in its facts behind the figures for half-year 2014. In his opening remarks, the Executive Director of Business Development, Mr. Haruna Waziri, who represented the CEO of the exchange, commended the Dangote Cement Plc for coming to do its financials.
We would like to commend you for coming forward to provide the market with more information about the exciting developments within Dangote Cement. And I think a few of us actually took a tour of the Ibese cement plant with a few brokers that went with us about a couple of months ago. We know that you are the most capitalized listed company on the exchange with a market cap of over 3 trillion naira and one of the top listed companies in Africa.
Presenting the facts behind the figures, the Group Managing Director of Dangote Cement Plc, Mr. D.V.G. Edwin, spoke on the 60% increase in capacity of Dangote Cement production and also the plans for expansion of its operations in Sub-Saharan Africa.
This month, actually, we increased our installed capacity by 60%. We added this 9 million tons out of this 29 million tons was added in this month, 6 million tons in the Ibese, 3 million tons in Obajana. And we added another 4.25 million tons capacity this month in South Africa. So with 1 million tons in Ghana, today our installed capacity is 34.25 million tons. And the next slide is about our African expansion plans, which I also took you through earlier, that we have added up to 9 million ton capacity in Nigeria, 4.25 million ton capacity in South Africa. And in this year, Zambia would get, the plant would get commissioned, Senegal plant would get commissioned, Cameroon plant would get commissioned, and Sierra Leone too would get commissioned. And in addition, Ethiopia will also get commissioned by the end of this year. So these are the new capacities which should be added up in this year, which is what will bring us to the total capacity, as I had explained earlier, to close to 42 million tons. And we are looking at the countries we are looking at is Kenya, where we are definitely will be starting the work in this year, but we have put South Sudan on hold because of the current situation. Zambia, we are going to start up additional new plants, and we are going to start the work. And in Nigeria, we have already announced 2 more cement lines in Shagamu, and we are also going to start 1 more cement line in Gboko.
Mr. Edwin also explained how the company intends to operate effectively through the utilization of renewable energy like coal, considering the disruptions and challenges in the gas supply and market in Nigeria.
And the outlook, the gas disruption is likely to continue, but the feedback we are at least getting recently is that, at least for the rest of the year, that it would not be a bad situation. But the forecast, the years to come, yes, it's going to be bad, and that's why we are investing in coal. And in the Ibese plant, we are trying a new strategy to bring in Smith is a cement equipment manufacturing company, and they have experience as an operation and maintenance contractor to come and take over the operation and maintenance. Because our vision is now expanding globally, even outside Sub-Saharan Africa. So now with this kind of a growth strategy, we are looking at to see whether we can focus all our energy and attention on identifying new potential countries where we can get in and focus our attention on and time on the projects, and have some successful operation and maintenance contractors to deliver the results. The plants which we have already invested would be managed.
The Chief Financial Officer, Mr. Brian Egan, also explained further on the financials of the company.
Our margin for the first half fell from 66.6% last year to 63.9%, and this is mainly due to issues around gas, where we had to use LPFO instead of gas in our kilns and gas AGO for our power plants. We also had a price increase during the period versus last year. And the fourth issue is that in terms of production mix, we produced more from Gboko versus last year. Despite the additional costs in our cost of sales, we ended up with a profit before tax of $107 billion, or billion naira, in line with last year. Going to the next page, when our balance sheet continues to grow, we had an increase in non-current assets, again due to the investment in our operations in Nigeria, both in Obajana and Ibese, and also the development of our pan-African projects. Current assets fell from 148 billion to 122.5 due to lower holding of cash. Again, this is due to the funding of the dividend, 2013 dividend. Overall, net cash, net debt at the end of the period is $200 billion, or billion naira, less than 1 times EBITDA, and we're expected to come down slightly before the year end. On page 6, we generated strong cash from our operations in the first half of 145 billion naira. This was used, 117 billion was invested in projects in Nigeria, 73 billion in Nigeria, and 44 billion in Pan-African projects.
Mr. Bismark Rewane, the CEO of Financial Derivatives and independent analyst for the Dangote Cement Fact Behind the Figures, in his analysis, stated and affirmed that the brand in its EBITDA margin had shown a positive trend and has great enormous potentials in the market considering the huge infrastructural gap and demand in Sub-Saharan Africa.
We would say that the Dangote Cement Company's EBITDA margins are quite attractive and sustainable. We think that the group remains focused on Africa and the cement industry. It's going to play globally, but it's going to start from home before it goes out. Without reservations, we have no reservations in validating the Pan-African strategy that has been presented to you by the CEO and CFO. And if Africa achieves its growth projections, then this Pan-African strategy will be an opportunity to capture value over the next years and in the need to bridge the infrastructural gap. So if I was a betting man, and I don't usually bet, I'll be betting on this investment at this time. Thank you very much.
The Group Managing Director, Mr. D.V.G. Edwin, speaks further on the market's performance.
We had a major impact because of the non-availability of gas, and especially if you see the distribution of gas, we have using gas in Obajana and we are using gas in Lagos. The Lagos in Ibeshe plants and like our competitors Lafarge too are not affected. The gas disruption was mostly in the rest of the country, so Obajana took up a very significant impact. As I explained to you, we are looking at long-term strategies, and one is investment on coal, another is investment from the group companies on gas. The holding company is investing on gas exploration. They are going on gas pipeline infrastructure. You can imagine 500 kilometers of subsea pipeline, deep offshore, dual pipelines. It's a massive investment. So because of the availability of the gas, they are planning to invest on this infrastructure and also gas exploration. And from the Dangote Cement, we are already invested on coal mining, and another is coal operational capabilities. The operational capabilities alone require $300 million of investment, which we have already committed. We have opened the LCs. The first set of equipment have come, and we are commissioning in Ibeshe this month and in Obajana next month. So we have put up a backup solution. Within 12 months, the company will totally be independent of gas requirement. Gas will be available as a fuel, but we don't need to be depending upon that.
With 30% cap of the Nigerian capital market, it is expected that the Dangote Cement expansion plan and further investments will translate to sustainable growth of the markets in Nigeria and Africa.